Hey folks, Todd Martin here, your local Louisville real estate broker here with Amped Realty. Um, this is a repost of an earlier live stream I did today. Unfortunately, I found out that for some reason or another, we did not have audio. So I was talking for the whole thing. And for the few of you that joined me earlier, I appreciate that. Thank you for hanging in there for a little while. But hopefully, I think we've got all the glitches worked out. So I wanted to re-record this so everybody has an opportunity to see it. Now, this presentation is called "Here's What We Know." This is just kind of an overview of what's happening within the market and the marketplace in real estate as we're seeing it, as professionals coming down the pipeline, because there is a lot of stuff going on, and the better to arm yourself with is knowledge here. Now, how can I help you? Just let me know. If you have a general question and you think that some other people might benefit from this question and answer, feel free to type it down in my comments. I will definitely get back to you there with regards to the answer to that. If it is something that's personal and you've got some questions or concerns with regards to personal matters, just shoot me a private message and I will definitely get back to you. You can also call me at the number below, and I'm happy to chat with you anytime regarding whatever specific issue that it is. I may not have the answer, but I might know where you can find the answer to that. Okay? Now, I just want to let everybody know, hey, relax. I am isolating. As you can see, I'm the only one here. But again, our safety is on the forefront of everything that I do and that we do here as a company, just to make sure that everybody is staying safe and that there are no issues or problems, and our clients are safe and protected as well. Disclaimer here: I am not an attorney. I don't claim to be an attorney. I don't claim to be a tax consultant, an accountant, a CPA. Shoot, in some cases, if you're watching this, I may not even be your broker. But this information is just kind of for general purposes. And if you are seeking counsel on those, and you need somebody to touch base with, let me know. I can hook you up with that person. Or if you've got questions, holler at me. Happy to chat. All right, let's jump into it. So what's on the agenda today? Well, we want to talk a little bit about who's in trouble. Where do we see the opportunities for the buyers? Where do we see the opportunities for the sellers? And what if you're staying put? What if you have a mortgage already and you're just staying put and you're not looking to buy or sell? And then also, we definitely have bright spots in this industry with what's coming down the pipeline as things are continually getting better. And I want to kind of open it up again, question and answer. If you down below, leave me a question. I'll get back to you. Like I said, if it's a good question that you think other people could benefit, please feel free to drop it in the box below, and that way we can open up a conversation. And of course, private messaging is always an option as well. And then kind of the takeaways, just a quick review of what I'm going to go over today. Now, here's the thing. Who's in trouble? Well, when the market turned on the stock market about 2 to 3 weeks ago, we saw vacation and second home markets just stop. They came to a standstill. And what ended up happening there was people that had additional monies to spend and to purchase those luxury homes just decided that they weren't going to do that. And it kind of goes hand in hand if you think about it with high-end luxury price points as well. Now, think about this, okay? When somebody is purchasing a high-end luxury home, a majority of the time that is not going to be a cash purchase. That's probably going to be based on the assets that individual has. Same way with luxury and secondary homes. That's going to be stock market, 401k, Roth, retirement benefits, whatever it is, secondary income coming in from a secondary job. Again, it's more of a credit play. And while those portfolios are taking a hit, those high-end luxury homes and those secondary markets are definitely drying up. Now, again, luxury, it depends on where you are in the country. I would say in Louisville, you're probably starting at $750 and up, and places like New York and California, luxury is probably $2 million and above. right? So again, it's all based on where you're going to live. Now, if this goes on long enough, we're probably going to see some issues with condos, and they're going to suffer in the areas where they're somewhat atypical. And let me explain what I mean by that. So if you look at states like Florida, and you look at states like New York, larger city populations that are built going up, and in Florida, you have a lot of condo communities built on the beach. Those things are second nature. When you look at New York, everybody's building up, everybody's living in condos. That's just the way that everybody does it. But if you take states such as, well, let's look at Idaho, let's look at Texas, let's look at Kentucky. Those particular states, our state again included, we like land. Okay, you want land, give me a home where the buffalo roam. So you want a backyard, you want something big enough for your family to hang out in, you want the white picket fence, right? So again, condos are kind of atypical on that market. And what ends up happening there is if you have a large group of people in an area that can't pay their mortgages, well, then that homeowners association suffers and has to start coming out of pocket. And what used to be an easy get in on a condo situation, condos have to be approved. And you may or may not know this, but if you want to do a first-time homebuyer program through the FHA, those condos have to be associated with FHA. And believe it or not, there's a lot of condo associations that are not. But as money starts to trickle out of these, and their books don't balance out, and maybe some people come in and rent and some people are still owning, FHA looks at all that. So what could potentially happen is that could kick a lot of those associations out of the running for lower entry points into those condos. So we kind of see, the market, as the market shifts, we're just going to have to kind of flow with it, but we've got to be very, very careful. Now, potentially every segment of the residential market is going to have, or could potentially have, difficulty in closing a transaction. Now, if you've bought a home before, you kind of understand that, listen, there are a few things that go along with buying a house, or there's people that are involved. Your realtor, that's probably going to be your key point. Then your lender, if you're purchasing, and then the closing company, okay, the attorneys. Those are your big three keys, okay? Behind them, there are dozens of people that are getting the job done. So you've got your tax transcriptionist, you've got your flood surveyors, you've got your appraisers, you've got your title researchers, right? With courthouses being closed, it's hard to research those records. And on top of everything else, you've got your own employer to deal with. So if you're furloughed and you started the process of purchasing, and you go to try to buy it and you don't have a job, that could be an issue too, right? And it just depends on the type of loan and the situation that you're in. So again, what we're looking at is we're looking at ways to kind of overcome these issues or potential positions that are going to happen in the market as we see this kind of a downturn for a little bit, because like everything, it's going to go down, but it's going to come back up. Now, where are the opportunities for the buyers? And that's an excellent question. One of the things that we have to look at is that this is not going to be like the 2007, 2008, 2009, where we had a flood, and I do mean a flood of foreclosures come onto the market. I mean, I remember this. There were some agents that's all they did because that's all that was happening. But the thing that you have to understand right now is that 37% of all Americans do not own a mortgage or do not have a mortgage at all on their property. So they are in a cash-rich position, a very, very nice equity position. And the remaining 63%, more than 1 in 4 have 50% equity. So the thing that you have to understand is that people are staying in their houses longer. And without the crazy rise and falls, and those that were able to ride through the last recession that we had, they've got some good equity in their property. Okay, those numbers have come back up. People can sell with a little bit of a discount versus having to go into foreclosure. So you have to remember that. And then the other thing too is that after 2007 and 8 and 9, and as the economy recovered in 2012, stricter and more stringent guidelines came into account with regards to purchasing a home. So it wasn't like Mr. Jones walks into lender A and goes, "Hey, lender A, I make $200,000." And they go, "Mr. Jones, that sounds wonderful. Here's a check for $400,000. Go enjoy yourself." No, now Mr. Jones has to actually prove that he makes that money. Okay, so because banks no longer want to lend out to people that can't afford to pay. So again, much more stringent, whereas you're going to be building up the market, right? So as a buyer, if you're a strong buyer, you're going to get in there, right? Now, for home buyers, in the more average price points, we're going to be getting into reduced multiple offer situations. What I mean by that is if you've been looking at a market, if you've been looking at an area in town that every time you put an offer in, you've got 3, 5, 7 multiple offers coming on, those may disappear. Now, they may not be as strong as they were before. I did help a client negotiate, and luckily we won it, but we were up against 12 other offers. I should say 11. We were 12th, right? And it's very, very difficult when you go to purchase a home and you're up against 11 other, 5 other, 10 other people, right, for the same property. You're going to see some of these multiple offer situations are going to go by the wayside, again, because buyers are going to be more cautious. But also, you're going to see some greater concessions from the sellers. When you're in multiple offer situations, sellers don't necessarily want or have to offer closing cost and prepaid assistance, right? Or leaving the appliances. Sellers may be more highly motivated now because of employment changes and the like and whatnot. And we're going to see sellers that must sell versus sellers that want to sell. Okay, that's going to be a big difference in the marketplace. And again, we're not talking about foreclosures. We're just talking about, regular pricing. So if you are a buyer and you're serious about it, now is the time to start bringing everything together so you can get in there, right? Because here's the thing, if you had your eye on a particular area, guess what? You might now be able to get into it, again, without all the craziness that we've seen in the past. Now, where are the opportunities for the sellers, right? So, opportunities for the sellers. This is not the time to do a fire sale on the property. You don't need to sell your house out of desperation, okay? We're only, a month or so into the coronavirus, about 6 weeks, really, when you think about the situation. And I know that there is a concern coming down the road, but prices are not dropping. Okay, we're still seeing a steady flow of prices within the market. Okay, don't do a fire sale. I would highly recommend against it. Again, also, you may not have all the multiple offer situations coming in that we talked about in the past, but if you think about it, there's still serious buyers out there, and 4 out of 5 serious buyers could fall off the market today, and you're still going to be able to sell your home for a fair rate. All right. I think that as we go on and as things have changed, instead of having every person come through your home, we're going to have only qualified buyers come through your home, and that means that sellers more or less are going to be requiring that the buyers provide proof of funds or proof of approval for the loan amount in order to come in the house, especially because you don't know where people have been. Again, safety being the number one concern. And then you've got to come through and disinfect the house when buyers were in there looking. There's going to be things in place like no-touch policies, providing gloves, shoe covers, making people remove their shoes, hand sanitizer and washing stations. So again, those are the things that are going to be a benefit. We may not have the numbers, but we're going to have the serious buyers come through. And then obviously we're working with our sellers to provide virtual showings to buyers. And of course, if you're a buyer and you're interested in seeing a house, but you're concerned, or you're a seller and you're concerned about getting people in your house, obviously hit me up. But these are the things that we're doing to maintain safety for our clients, right? Now, what if you're staying put? What about me? And that's a great question. So you're not in the market to sell. You're not in the market to buy. For everything that it is right now, I cannot stress this enough, but you need to get your documents together and you need to get a loan application in. Even if you decide that you're not going to do it, what happens if the perfect opportunity comes along, the perfect storm comes along, and you get notified about it? By the time you get notified about it, you're going to miss that opportunity. So a couple of weeks ago, we saw some crazy rates, right? So we were up at 2.9%, and the next day they were up at 4.25 or 4.125, right? So the thing that you've got to remember here is that there is not going to be a lender that's going to lock you in without having your application. We've seen some lenders and they are bringing their refi pricing up to 5, 6, 7% because they've got so many loans on the docket they just can't handle anymore. But what if you're working with a loan officer, right? What if you're working with a mortgage broker, and that mortgage broker has your application in, and you tell your mortgage broker, hey, if it hits 3, if it hits 3.25, lock me in, right? Because the market fluctuates just like the stock market. It could be up in the morning, down in the afternoon, up back towards the end of the evening, and you want to get it when it's down at the dip. Okay, again, you've got to get all that information in. That's why I would highly recommend that you want to talk to Brian Schutte over at Ruhoff Mortgage, right? Here's his contact information below. You guys see me pointing at the screen? Below right here. Give Brian a call. He will walk you through the process. Now, here's the thing. You want a local lender. You want somebody with a proven track record, okay? I know those things online sound great, and I know we don't talk to people much anymore, but really you need person-to-person contact, okay? Brian's going to walk you through, he's going to tell you what you need, and he's going to get you ready to go. And as soon as those low numbers hit, he's going to lock you in. Because if you go with, was it Rocket Mortgage and Lending Tree and large banks like Wells Fargo, those are the guys that, hey, put me in now, and yeah, if you don't want my rate, that's okay. You can come back later and do the whole thing over again. But again, talk to a local lender who knows the local market and who's watching the market. And again, if you're concerned about your employment, one of the things that you want to take a look at is that the government-backed loans, Freddie Mae, Fannie Mac, Ginnie Mac, they announced mortgage deferral programs or forbearance. Now, I did 2 videos on these just the other day, and I'm not going to get into it here, but what I am going to say is, 1, it could be very positive, 2, it could be very negative, okay? Read and understand what you're getting into, and never take a bank's word on it, okay? So, you got any questions with that? Watch those previous videos or hit me up. Now, lots of bright spots here, believe it or not. Again, we're getting creative with the showings. We've got virtual showings to keep clients safe, practicing social distancing, booties, all the things that we need, booties, gloves, hand sanitizer we're loading up on now as that's coming back into stock. Again, the government-backed mortgages, the forbearance programs, again, I'm going to stress it, that you need to understand what it is. It's a contract between you and your lender, okay? Look at my previous videos and decide for yourself whether or not you want to do it. And again, we can talk about that. But that is a good thing for some people, all right? Now, they also released the relaxing requirements for appraisals and VOEs, or verification of employment. So they understand that you might be furloughed for a while, because a lot of times if you started the loan process and then you lost your job while you were in the loan process, you just didn't get to purchase it. But if you're furloughed and the government's coming back, a lot of times they understand that those people are going to be hired back on, okay? And here's something for people that are thinking about getting into real estate, or agents that are in real estate right now. If you're a part-time agent, this is extremely, extremely tough time, okay? Because it's let's face it, it's just hard to live off of 1 or 2 deals or 3 deals a year. And so I think what we're going to see in the market is we're going to see, again, just like we did in 2007, 8, and 9, several agents drop out of the market with a tremendous opportunity for those of us that are full-time to show, hey, that we weathered it and we have the strategies and procedures that can help everybody through these troubled times. So again, if you're thinking about getting into real estate, or if you've got any questions about, maybe you're thinking about leaving real estate and you want to talk about it, we're always open to helping agents here over at Amped Realty. So again, you're welcome to give us a call or shoot us an email. But again, there's a lot of positive things going on with regards to the real estate market and with regards to the current situation that we're in. Now, the takeaways: if you're selling, don't panic. Now is not the time to fire sell. You need a strategic partner in this. We're happy to help and talk about things if you want to talk about it. Now may not be the best time for you to sell it. Might be the best time, might be 3, 4, 6 months down the road to take a look at it. And again, you're going to be getting buyers into your property that are extremely qualified. If you're a buyer, be strategic about it, right? Start the process now. Find out what you can afford, okay, and get ready to lock in a low rate. That's why it's important to make sure that you understand the process. And again, you're going to be able to get into some places that you couldn't before because there are people that are backing out of it on a more cautious level. And again, also, if you're staying put, you can take advantage of the free money being the furlough. Again, I'm going to say it, but read and understand what you're getting into when you do that, okay? But it is an opportunity for some. And then low rates on the mortgage, on the refi, okay? Low rates. And there's also low rates on the purchasing. So again, you've got to be ready to go. So I hope that helped everybody. Again, drop your questions down below. Drop me a private message. Pick up the phone and give me a phone call. I'm always happy and always willing to help. Again, if I don't have the answer, I can help you find the answer. But, there you have it in a nutshell. If you need anything, just let me know. Be safe out there. Be kind to each other. And we look forward to connecting soon. Take care. Have a great day. Bye-bye.